Friends, the story I'm sharing today is stranger than fiction. If you bought AppLovin stock in the last year, congratulations, you've witnessed a miracle. This stock, ticker symbol APP, riding the AI wave, has skyrocketed 1,200% in 2 years, leaving Nvidia in the dust. Wall Street analysts are cheering. Retail investors are throwing a party. But what if I told you underneath that beautiful green chart lies the wreckage of a $35 billion Chinese Ponzi scheme? What if behind those soaring numbers is the blood and sweat of young people imprisoned in Southeast Asian scam compounds? Do you still dare to hold it? Just today, a nuclear-level investigative report was dropped onto Wall Street desks. It alleges that AppLovin is not some AI giant. It is, in fact, the largest, most sophisticated money laundering machine in the history of the Nasdaq. Welcome to the Financial True Crime series. Today, we are ripping the mask off this $100 billion behemoth. The story starts not in Silicon Valley, but in Dongguan, China. In the 2010s, China experienced a massive P2P lending boom. A company called Tuandaiwang was a star player. You probably know how it ended. Police reports showed it illegally defrauded investors of 253.5 billion RMB. That's about 35 billion USD. Over 1 million investors lost everything. In 2019, Tuandaiwang collapsed. The boss, Tang Jun, turned himself in. Tang Jun went to prison, but where did the money go? Billions of dollars vanished like a ghost. This introduces the first key figure of this case, AppLovin's mysterious major shareholder, Hao Tang. You can barely find a photo of him on Google, yet he was the director of the great capital escape from the Tuandaiwang disaster. According to French court documents, he wasn't just an investor, he was the capital cleaner behind the boss. Before the platform completely imploded, he used various methods to move the money out of China. But this money was still dirty. How do you make it white? Hao Tang gave criminals worldwide a masterclass. The oldest and most effective way to wash money is gambling. Here, we introduce the second big player, known as the overseas gambling king, Zhihui, boss of the listed company Laundering International. Rumor has it that late one night in a Macau VIP room, a not very intense high-stakes game took place. Zhihui accidentally lost a solid 15 billion RMB to Hao Tang at the card table. You think that was bad luck? No. In the world of financial crime, this is called asset delivery. If I directly wire you 15 billion, banks trigger alarms, police make arrests. But if I lose it to you at a gambling table, that money becomes legitimate betting winnings. Through this carefully designed game, money stained with the tears of P2P victims transformed into squeaky clean seed capital in Hao Tang's hands. The money was clean, but was he safe? Back then, the Chinese government issued a red notice attempting to extradite Hao Tang. This legal battle went all the way to a court in Bordeaux, France. Facing extradition, Tang hired a top-tier defense team and played an unexpected card: political persecution. The defense claimed he was being hunted not for economic crimes, but because he was entangled in high-level political purges involving a former Chinese vice minister of public security. They even played phone recordings in court where investigators hinted, "Just clarify the political matters and you won't be detained." The result? Although the French court confirmed the facts of the financial flows, they refused extradition due to political risk. Hao Tang, carrying billions, retreated safely overseas. He was physically safe, the capital was secured. Now Tang needed to make this money spin. And so, the third key figure enters the stage, Chen Zhi. He is the boss of the Prince Group in Cambodia. In official documents from the US and BK, he has already been designated as the leader of a transnational criminal organization. His group is accused of operating cyber scam parks, human trafficking, and notorious pig butchering scams. The report's deduction is terrifying. The Tang Tang family is responsible for washing the old dirty money from the Chinese P2P scheme. Chen Zhi and the Prince Group are responsible for generating an endless stream of new black money in Southeast Asia, and AppLovin stands at the exit of this entire chain. So how does this money laundering machine actually run? Why would criminals buy stock in an ad company? The report names two products, Array and AXON.
Let me explain it in plain English. Array can be understood as a secret pipe for installing apps. Generally, when we install apps, we go to Google Play or Apple's App Store. These platforms do basic vetting to keep obvious malware, gambling, and scam apps out. But some phone manufacturers and telecom carriers partner with ad companies like AppLovin to pre-install their SDKs on phones. The result is that this SDK has the ability to install advertisers' apps onto your phone almost without you realizing it. Security researchers have torn apart the code and found functions like install on close, meaning when you close an ad, it conveniently installs an app for you. If the advertiser is a normal game company, it's just a bad user experience. But if the advertiser is a cyber scam group, a fake investment platform, or an underground casino, this pipe becomes a perfect criminal channel. AXIN, on the other hand, acts like a radar for finding victims. AppLovin proudly claims AXIN can predict the value of every user, helping advertisers push ads to the people most likely to spend money. In the normal business world, this is a great tool, but in the world of cyber scams, it's completely different. Scam syndicates are willing to pay incredibly high advertising fees for a target victim. Because if that person eventually wires money or deposits funds, they can steal tens or hundreds of thousands of dollars. AXIN in this scenario automatically helps these highest bidding ads find the people most easily scammed, most addicted to gambling, or most prone to impulsive investing. And so, victims are precisely targeted, silently have apps installed, are slowly fattened up within the app, and finally harvested one by one. From a purely technical perspective, it might just be a neutral algorithm, but looking at the results, it is effectively helping these criminal groups reach into the phones of users worldwide. And finally, all these technical means converge toward one goal: washing money. The report names this model the ad tech laundromat. It's a perfect game of left hand to right hand. Let's break it down into 3 steps and you'll understand immediately. Step 1. Injecting the black gold. The Prince Group converts cryptocurrency, like USDT, defrauded from pig butchering scams, into fiat currency via underground banks. Then, using countless shell companies registered in Hong Kong and Singapore, they open advertiser accounts on AppLovin. At this point, the money's designation changes from scam proceeds to legitimate advertising budget. Step 2. Crazy spending. The Prince Group starts paying AppLovin hundreds of millions of dollars, ostensibly to buy traffic. Investigators found an absurd detail. A Cambodian food delivery app called Wow Now, with a tiny market limited to Cambodia, had astronomically high ad spending on AppLovin that defied all business logic. Why waste so much money? Because essentially, this isn't buying ads, it's paying money laundering fees. Even crazier is the self-dealing. The Prince Group is both the ad buyer and the ad seller. They control thousands of zombie apps that no one plays. They pay AppLovin, direct AppLovin to place ads on these zombie apps they own. It's the equivalent of paying a huge sum to hire someone to paste a poster on your own front door. Step 3. Legitimate return. The money spins around inside AppLovin's system. AppLovin deducts its platform fees, the cost of laundering, and then pays the remaining money back to overseas accounts controlled by the Prince Group under the guise of developer revenue share. What is the outcome? Originally bloody scam funds have transformed into legitimate remittances from a NASDAQ-listed company. The Prince Group can use these clean dollars to buy real estate, buy stocks, or invest in their next round of crimes. And for AppLovin, it's a win-win, or rather a double contamination. First, its revenue is fabricated. Short sellers question that a massive portion of that jaw-dropping growth is actually just laundering budgets from criminal groups. Second, its data is poisoned. This fraud-based traffic makes its advertising ecosystem look much more prosperous than it actually is. Story time is over. Let's return to the question investors care about most. Is AppLovin going to die? What should people holding the stock do now? Let's be clear. Everything right now are accusations and inferences from a short report, not a final court verdict. But that doesn't mean you can ignore it. The release of this report drastically raises at least 3 types of risk. First, regulatory risk. The SEC, DOJ, and CFIUS could all be forced to step in, investigating shareholder backgrounds, sources of funds, and even demanding the company explain why it has these high-risk clients. Second, share price risk. Historically, whenever allegations of this magnitude involve money laundering, national security, or human trafficking, once there is substantive action, the stock price doesn't just drop by 10 or 20%, it enters a valuation reset or a long-term discount. Third, reputational and ESG risk. More and more institutional investors now focus on ESG, environmental, social, and governance. Once a company is labeled as helping cyber scammers launder money or profiting from human trafficking, many large funds are mandated to sell. This turns into a stampede. So, as ordinary investors, what can we do? I will use this event as a living textbook, teaching us how to read short reports, how to distinguish between facts supported by public documents, and inferences that leave room for imagination. Hearing all this, you might feel the waters of the US stock market are too deep. We ordinary retail investors don't have the resources of investigative journalists. Facing hundreds of pages of financial reports and sudden short reports like this one, we are often the last to know the truth. Often what we lack isn't information, but the ability to process information. This is also why I want to recommend everyone use AlphaPilot. AlphaPilot is a tool independently developed by me and my team, which we also use for our daily trading. In this financial battlefield of information exploding, where truth is hard to distinguish, it can help you extract key signals from massive market noise, using models to analyze market sentiment and potential risks. If you don't want to be the person at the poker table who is the last to realize they are the patsy, give AlphaPilot a try. I'll put the link in the description below. Let AI safeguard your trading. Finally, I want to say this. This AppLovin story, when it comes down to it, isn't just about a stock. It connects several events you might have seen separately in the news. The Chinese P2P collapse, Macau high-stakes gambling, Cambodian scam compounds, and the US tech stock frenzy, all into a single thread. At the start of this thread is the hard-earned money of countless ordinary people. At the end of this thread are the flashing green candlesticks on Wall Street screens. What's truly terrifying isn't that any one person is greedy, but that this entire system can be designed so that if you are smart enough, you can wash the dirtiest money into the cleanest assets. If you like this kind of news, finance, and crime story weaving content, remember to subscribe to the channel, like, and share. In the next episode, we will continue to dig into the stories in this market that look glamorous on the outside, but hide blood and tears beneath.